What is going on, everybody? Welcome into another edition of the Daily Energy News Beat Stand-Up here on this gorgeous Monday, September 25th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, Energynewsbeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood. And I mean, there's some wild news going on out there.
Absolutely. The weekend is never short of stories. We hope you guys had a relaxing weekend, and we're here to fire you up, support you all through the week, bringing you the best energy news. First up on the menu for today's show, recent grid reforms might not be enough for Virginia to hit future clean energy targets, advocates say. Oh, you don't say. We'll see what's going on over in Virginia. Next up, EV battery factory will require so much energy it needs a coal power plant to power it. That's courtesy of one of our favorite websites, Cowboy State Daily. In a shocking turn of events that you would have only known about if you listened to this show, EV batteries need coal to power it. So Stu will cover what's going on in Wyoming. Next up, the trader that sparked a surge in U.S. oil prices. Done. Love a good conspiracy theory. So Stu's going to dive into who's driving up our energy prices. Newsflash, it's not who you think. Next up, the new face of nuclear energy is Miss America. Interesting. So Stu will dive into whose nuclear energy is rolling out as the new marketing spokesperson. And then finally, better looking than Stu. Well, I'll hint there.
Oh, yeah.
Better looking than Stu. Next up, and finally, federal judge orders Biden administration to expand Gulf of Mexico oil auction in a back and forth, legal with the administration, back and forth. Federal judge now in Louisiana ordering this administration to expand its September 27th oil auction. Stu will cover that. He'll kick it over to me. I'll lightly cover what happened in the oil markets on Friday. We did see rig counts, and then we'll really just kind of prep you guys for this week, keep you up to speed on what you should watch out for, and then we'll let you get on here and start your week. But before we do all that, guys, as always, the stories and analysis you are about to hear are courtesy of the world's greatest website, Energynewsbeat.com, the best place for all your energy news. Stu and the team do a great job of curating that website to make sure it stays up to speed with all of your pertinent energy and oil and gas news. You can subscribe to this podcast on Apple Podcasts, Spotify, or YouTube via @EnergyNewsBeat. That's the best way to support the show. Go to YouTube @EnergyNewsBeat and hit that subscribe button. We appreciate everybody who's done that. You can also check out our data news product combo, dashboard.energynewsbeat.com, the best place for, as I mentioned, that data news combo. Interact with the show, questions at energynewsbeat.com. Check out the description below, links to all of the articles you're about to see. Another way to interact with the show, again, questions at energynewsbeat.com. Follow both Stu and I at LinkedIn, all in the description below. I'm out of breath, though, Stu. Where do we want to begin?
Hey, let's have a little bit of fun. Boy, that almost sounded like Putin. Hey. Okay. Recent grid reforms might not be enough for Virginia to hit its clean energy targets, advocates say. Michael, this is a common theme. And when you sit back and take a look at job creation, wind, solar capacity in the queue, and then you take a look, Virginia is on track to meet short-term carbon-free targets laid out in the sweeping Clean Economy Act of 2020. It's remarkable considering that 44,000 megawatts of wind and solar energy storage projects proposed across the state are still waiting in PJM's interconnection queue, which is, Michael, what is that? That is regulations from the Biden administration holding this up. Oops. Now, here's another quote in here from Amman. He says, even though Virginia is in good shape for the immediate future, more proactive transmission planning would really help. Really?
Yeah.
You cannot put Michael, you cannot put renewables on a grid without planning ahead. It does not work. You cannot do it. And they're 180% higher in order to get it done.
It's dumb. It's the pot calling the kettle black. This Amman Dana Amon. Do you know what? You know what this person is? They're a policy analyst at the Natural Resources Defense Council, who I'm pretty sure was involved in writing the Inflation Reduction Act. So the policy analysts didn't think originally when they wrote the bill that maybe if we're going to inject all of this money into the economy via clean energy, we should at least have the ability for somebody to approve the permits. They're absolutely stupid. So this policy analyst should probably go work. It's probably straight out of the IEA, straight from Brussels over here, and they're getting hired by the Natural Resources Defense Council, because clearly if you had seen this coming, you would have addressed this in the Clean Economy Act.
Absolutely.
It's hilarious.
Further down here, it says 5,200 megawatts of offshore wind. While she is cheered by the progress, though, so far, she's faced many hurdles. Michael, on 5,200 megawatts, let's talk about what that means to the grid. 5,200 megawatts may be the tag on that wind turbine for their capabilities of generation, but for a grid balancing authority being able to do that, that's divide that by 180. You're not going to be able to count on that wind in order to remain all the time.
And I use about 5.2 megawatts of electricity every month to power all my screens. So I don't even buy it's that much. I just think it's hilarious. Everyone now is talking about, well, permitting. We got to reform permitting. We got to reform regulations. Like, you dummies, think of that beforehand. Get the regulations right before you start dumping all of this money in, or else it's just a cash grab and nothing's going to happen.
Personally, I think it's a cash grab, but we'll leave that alone. Okay. Let's go to the next one here, Michael. And it is from our fans, our buddies over there at the Cowboy State Daily. Please follow them. They are phenomenal folks up there. EV battery will require so much energy, it needs a coal plant to power it.
These articles these headlines write themselves.
Oh yeah, it is a 4 billion Panasonic electric vehicle battery in DeSoto, Kansas, will help satisfy the Biden's administration to get everybody on EV, but it's using a coal-fired plant. I've been by this plant, and it is old and dirty. Yes, it does need to be shut down. A 15-pound lithium-ion battery holds the same amount of energy as a pound of oil.
Yeah, I'll take the pound of oil. I love how they have to point out that, remember, Panasonic's set to receive $6.8 billion from the Inflation Reduction Act.
This is just energy hypocrisy at its finest. I love the Cowboy State Daily when they put lipstick on a pig is the next title in this area.
What bothers me is that the reason this EV factory is causing such a spike in the energy consumption that they have to now delay the transition from coal to natural gas because they need the power now. This is an example of shooting yourselves in the foot in order to not worry about the pain that's going on in your right foot, which was just run over by a car.
Right. So would you say that Kansas is basically pulling a Dick Cheney on the citizens there? Yes. And they just shot themselves in the foot, and the splatter got everybody in Kansas City. Is that
took it in the drive-through again?
Took it in the drive-through. They took one in the team for their foot. Okay, let's go to the next one here, dude. I want your opinion on this. The trader that sparked a surge in U.S. oil, dubbed the Atlantic Trading and Marketing Corporation, company appears to be taking an advantage of high refining margins created by tight supply and strong demand for fuel.
Yeah. So according to these unnamed sources, Stu, Atlantic Trading and Marketing is the trading arm of French supernator Total Energies and has begun, quote, gobbling up crude oil in this, basically at this push because of this strong demand and what we would call this large crack spread between what refined products trade for and the actual underlying physical commodity. And they've been doing so since last November.
Yep. Now, let's add this squirrel to this mix, and that is Russia has banned all diesel and refined products. That is going to make this even more valuable. And the energy hypocrisy, climate change hypocrisy is now being brought out on Total Energy because they are absolutely gearing up to help take advantage of that. Did you just try to shoot yourself in the face?
I was giving a wee wee.
Oh, wee. Okay. I was like, either that or you were doing the evil guy with Mike Myers on
$1 million. How much money they're making on driving up crude oil prices.
Oh, yeah. You got to love it. Hey, let's go to the next one here. The new face of nuclear energy is Miss America. I think this is actually really cool. I got to give a shout out to RT over there at Pecos Operating and podcast host of The Crude Truth. Grace Stanke celebrated her birthday with a visit to the Georgia nuclear power plant, but she is Miss America. And it is really cool because she got she's got a job after her tour this year with a nuclear group, and it's going to be
Constellation Energy. Interesting. I wonder what she's going to do. It's a mix of technical work as a nuclear fuels engineer. So she's a nuclear fuels engineer. Are we sure about that? I guess she's a nuclear engineering student. Okay. Good for her.
I got to, since we did, the stuff on it, she's smart. She is smart. And I'll tell you what, she would make a better, what was the guy that was stealing clothes, nuclear waste in the Biden administration?
Oh, what's his face?
Sam, was it?
Yeah, I don't know, but the guy that was stealing people's clothes, they were like going to airports and stealing people's luggage.
She'd make a better one there. I guarantee you, she wouldn't be stealing luggage. So,
yeah, well, absolutely. I mean, if we had more nuclear engineering students, and what's interesting is that probably what we need to do is begin to push people getting into stuff like nuclear engineering. There's not enough of them. If we're really going to push this stuff, we need an educational push.
Right. Not right now. I'm communicating with their scheduling department to get her on the Energy News Beat podcast. So there's a little plug for what's coming around the corner.
We love that.
No, you bet. All right. And let's go to the last one here. Federal judge orders the Biden administration to expand the Gulf of Mexico oil auction. I'm not sure who picked this picture, but it looks like Diaper Dan there. Biden is all grumped out. I mean, it was. So the Louisiana-based judge concluded that the Interior Department probably moved wrongly at the 11th hour to yank roughly 6 million acres off the auction block. Whoa. The Interior Department of Bureau of Ocean Energy Management. Boy, that sounds like a rat cave of what do you want to call that one? Bureaucracy?
Yeah, it's not good.
No, not good. Rats get lost in there and then they have to finally come out. Never mind. Okay, the decision is a win for Louisiana, which it argued it stood to lose as much as $2.2 million in royalties. Oh, follow the money. Louisiana is not dumb.
It's how else do these counties make money? If you have oil in your county, there's a reason why we could get into it for we could go down this rabbit hole, but I think it's crazy that people don't think of second order effects. Why do all of the people who live around oil and gas love oil and gas? Well, I don't know, because of the amount of economic stability and uplift it brings to the region. I don't know. Maybe, it's not, it just, it boggles my mind. People are like, well, most people hate to live around oil and gas.
Michael,
I don't know. They're great places to live.
Michael, you have to remember, in Louisiana is also home to the Haynesville that oil field, I mean, the oil and gas field that we have Cheniere coming out of, all of that natural gas going to Cheniere and then being exported out. Do you know how much money the U.S. government is making out of the Haynesville in Louisiana?
Now, in the grand scheme of things, $2.2 million is really not that much, considering the amount of debt we're in. The problem is this. Don't think about the money. Think about the supply of oil. We're already in a point where we are going to be undersupplied. What is the one few things that an American oil company can do that can move the needle realistically in terms of oil production? Well, it's offshore. There's not much onshore that's going to really move the needle. I mean, outside of Exxon Mobil saying we're going to double our Permian spending, Chevron and Pioneer all coming out saying we're all going to double our capital expenditure in the Permian. Okay, that maybe moves the needle. What does move the needle? A $2 billion CapEx spend drilling 4 to 5 wells out in Louisiana, out in the offshore. That's, 150,000 barrels a day. Now you start seeing the needle get moved and you start seeing that gap closing. So while, yes, $2.2 million, the counter argument is, well, that's not that much. And look, they're saving the whales. We know where I stand on the whales, kill them all. But what I do stand for is if you're actually talking about lowering oil prices, you've got to put more supply. I mean, it's basic economics. So I think this is a short-term, looks good for the administration. They strike this down, but in the long run, it's going to kill them. This judge overruled it. It'll be interesting to see if it actually takes place. This auction is supposed to take place on the 27th. So on Wednesday, it'll be interesting to see if that actually goes through.
Hey, let me do a little bit of a shout out. When you're doing you're not going to be killing the whales in the Gulf of Mexico. A, it's not a major thoroughfare for whales. B, the sounding and all of the geo work that has to be done with oil and gas rigs is nothing like what has to be done in the wind and the offshore wind up on the East Coast. And that's a major contributor to the dead whales that you so aptly want to drop in and kill all the whales. And then I want to go ahead and drop them in the White House lawn. I think that would be great.
That's a great way to leave it. Let's quickly look at what happened in the oil and gas markets. On Friday, we did see the overall markets drop about 0.25 percentage point for the S&P 500. NASDAQ finished fairly flat. Again, fallout from the Chairman Powell's and the Federal Reserve decision to hold interest rates where they're at. The reason why I think a lot of this sentiment, Stu, is still much more soured is due to the fact that rates are going to be like that for a while. We saw oil prices rise and we're still sitting at 90.33, but our XOP contract last week actually dropped about 2.5 percentage points. That's interesting. Oil above 90, our aggregate XOP, which is our average upstream oil and gas contract, drops. Why would E&P companies struggle in a higher oil price environment? Well, a couple reasons. One, all the cash flow they're getting, they're having to return to investors, whether it's dividends, whether it's stock buybacks, and very little of it is going back into drilling. Why do I know that? Rig counts dropped on Friday. Again, we dropped 11 rigs. Oil price up 20% over the last 3 months. Rig counts dropped by over 40. Again, last week, we're now down another 11, 630. From previous year to year, we're down 134 rigs. Goes back to my argument about supply, Stu. There is just not enough supply coming on the market. But what's happening? Oil companies are going to start making more money. They're going to start returning money to shareholders. Why is there this push to return money to shareholders? Because the banks and the investments have left it. We never, people like to say it was ESG that drove all of the investment out of oil and gas. I take the counter argument. I take the fact that between 2012 and 2017, nobody returned a dime to these banks. Billions of dollars lit on fire trying to drill thousands of wells that were unproductive. All of these large these double premium locations.
Right.
Yeah, most of them aren't real. So it's interesting from the standpoint of we saw oil prices rise
Right.
in what should be a great move for E&P companies, yet their stock price fell. You saw it in rig counts. It's going to be interesting to see what goes forward. If that investment mood doesn't change, and again, you're seeing all of the ESG products begin to fail, but no one's saying, now we need to rush and spend more on oil. They're just saying the ESG experiment is over. Why aren't they also then saying all of this money is being dumped back into oil and gas? Because they're not dumb and they like money. And they understand that there's, no one's got 1,000 premium locations ready to drill. Trust me on that. You maybe got 10 if you're a large company. So you're just going to go. And so, to bring it all home, it's really interesting, the circle, this pot that's stewing right now in the oil and gas business too. And I don't know what's going to give. Something's got to give. Rig count's got to give. Oil price has to jump to 140 to see this rig, or what we see is the investment starting. Something's going to give here.
Let me ask this, because I believe it was Exxon that said they were going to double the production in their area in the Permian by reworking wells and going back in. I don't think that they could do that, but what are your thoughts?
So I am not an expert in reworks, or what we would call refracturing. Right. So the idea is there's all of these wells, horizontal wells drilled between 2010 and let's say 2017 that were drilled which were completed horizontally with non-modern completion techniques. And the two biggest factors in what differentiates an old completion from a new completion is two things: the amount of water you use and the amount of sand volume you use. That's really it. Yeah, there's, stages get larger. Maybe we go out 3 miles and all that, but let's just talk about the two things that separate a modern completion: the amount of volume, or the amount of water volume, and the amount of sand volume. And let me tell you, you're talking about a 4 times increase in both, from say a pre-2017 to post-2017. So what does that mean? If you have a large inventory of horizontals that were drilled between 2010 and 2017, you would on paper be like, oh, these are candidates to go in and recomplete. Let's use a much higher sand volume. Maybe let's tighten up our spacing, our staging, our stages a little bit, squeeze a few more shots in per foot, but really just apply more water and apply more sand. So as the theory goes, you might be able to see an increase. The problem is not a lot of that data is public. It's really hard to go into to determine whether or not from kind of an analyst standpoint. If you were to ask me, Michael, not having access to Exxon's proprietary data, what's their success on refracturing? I don't know, because I can't tell you which wells they've refracted or not. I could go maybe pour over all of their wells and say, was there a well that was on a normal decline and then 1 month was shut in, or 1 month had zero production, or at some point deviated drastically to the upside from its new production? Flag that as a rework. And we could do that. The problem is the data is not public. So of course Exxon's going to tell their investors, oh yeah, we're going to rework all these wells. Stu, we've got a huge inventory of reworks we're going to go through. Give us all the money you can get. From a practical standpoint, yeah, there's something to that, but it's almost like basically going in and trying to re-squeeze a lemon. You've already squeezed out a lot of it. The question is how much there is left that was left over from the original frac job, especially in the Permian, where you have really high permeabilities and really, really high porosities. Yes, the frac job wasn't as good, but you've still allowed for 10 years, sucked all the oil out of there. It's not regenerated. You haven't seen that much oil migration. So yes, that is something that people are talking about. Personally, I'm skeptical of that and think it's a wink, wink. Oh yeah, we got a lot of different locations we could rework, Stu.
Let me ask this also, because in your oil field service companies like Liberty Frac and a couple of the other frac folks, if there is the reworking on those and you're still going to get deals from Exxon, you're going to get all these others, Liberty Frac might be a good investment as well. If you're in there saying, hey, oil field service fracking companies will still have volume even with a reduced rig count. Is that a fair statement?
Well, yes, because I think what you're seeing is the duck number come down. Companies are taking their ducks and turning them offline. I'm not somebody that likes to invest in oil field service because I think it's too volatile. And it's too hard to classify, there's a lot of other things other than the price of oil that is going to affect an oil field service company that you don't really know about till after the fact.
Right.
A lot of stuff. I think if I was going to invest in an oil field services company, I do like Liberty a lot. I tend to probably lean more Halliburton, Schlumberger, because I think they have a more diverse product set, for example.
Right.
But I think this rework, Stu, is a fugazi. I've never met a guy that works at a service company who doesn't think you should frack with more water and more sand. Stu, it's like asking me. It's like asking you, hey, what should I do to increase my thought leadership? And you're just going to pound into their head, more podcasts, more podcasts, more podcasts. Someone who has a podcast, they come to you for advice. You're just going to say, do more episodes. Not that that's a bad thing, but guys know one thing, when you got a hammer, everything looks like a nail. So if you're getting convinced by a service company to do a refrac, well, of course they want you to refracture the well. Duh.
I loved your analogies there, Michael. That was way cool. Everything if you got a hammer, everything looks like a nail. I'm going to quote you on that. That's huge.
I struggle with this on a daily basis. So I'll give you one example real quick before, just to hammer this home. I struggle with this all the time. I have over the past 2 years become fairly fluent with Python. And once you do that, it's a very valuable tool to have in your skill set. A lot of different things open up from an efficiency standpoint, from how it integrates actually with, being in finance, how knowing a little bit of scripting coding can actually really increase your financial capabilities and your analyst, what you're able to analyze, the frequency, the amount of data sets, what you're able to do, how you're able to set things up. But what I've noticed is I found myself using Python to accomplish tasks that take me longer in Python, and I otherwise should have just used Excel because I can just do it in a pivot table. And the problem is when you get good at something, you think it's the only way to solve every problem. And you always have to take a step back and say, what's just the quickest and simplest way to achieve the best outcome? Maybe it's reworking a few wells, but I guarantee it's not reworking every single well, Stu, because not every single well is going to call for that. But if that's your plan to increase production, sure, you're going to run through a lot of different wells, may or may not work. So trust me, it's something that I struggle with personally every day and have to fight. I fight the daily struggle of hitting everything with, quote unquote, the hammer that I've got.
This is going to open up about 4 or 5 other discussions we'll talk about on a later show on how you evaluate wells for rework or that, because that's some pretty cool stuff.
The answer is don't. Just go drill a new well. But we can, if we sell a course on it, I gave you the answer to the course right here. No, I'm just kidding. I'm not an expert in that. I'm just, much like I'm a skeptic about 1,000, all these M&A deals, we joke about the number of premium locations or high quality locations. I take the same mindset to these reworks. Exxon's telling me they've got 10,000 rework candidates. Divide that number by 1,000. Maybe there's 100 rework candidates. So I'm on one today, Stu. I'm on one today.
All I had to do is poke the bear every once in a while. And this was great fun, Michael.
So, all right. What should people be scared about next week, Stu?
Oh, the government. But hey, we're going to have a great week next week. Got lots of good stories coming around the corner. There's some more international news coming around the corner from Saudi. You got to love them.
Yeah, we'll be anxiously awaiting our BRICS membership. We've officially applied. They've got our application. We're trying to throw in a sponsorship, so we'll see if they go for that. We're trying to get a little money out of them, but we'll see.
Oh, I think once they hear my Putin imitation, they will.
Hey. All right, guys. Well, with that, hope you have a great week. It's Monday. Hopefully there's not that many meetings. We will keep you on out of here, guys. For Stuart Turley, I'm Michael Tanner. Thanks for checking us, the Energy News Beat podcast. We'll see you tomorrow, guys.